Are you ready?
All right. What's good? What's good? Yo, we are back. Oh man, this is great. It's been a while, like a long while. Today I want to talk about a podcast that I had once upon a time. That podcast was Blockchain Speaks. All right. So hopefully you can hear me. Got my extra microphone here. And so, yep, I'm trying to get this cough knocked out. But man, it's been fighting me for a couple of weeks. As you know, we were in Miami, and that was nice, right? We was in Miami a few weeks ago, and we were doing some hold on a second. I'm just trying to get something here, make sure we're good. All right, so that's good. But yeah, we was in Miami a couple of weeks ago for the E-Estates Summit. We were at one of the properties that we are invested in. Very, very nice. Very, very nice. So I do want to play that. So I want to play that video so you can get an idea of what we experienced and really an idea about the platform itself. And so before I do that, I want to let you guys know today we're going to talk about some incredible information. If you are a follower of crypto, blockchain, the new developments that are happening at the highest levels in the government as well, then you will definitely be in for a treat. I'm gonna give you some updates on what's going on, what type of regulations are being put out there for crypto really to come on to the mainstream. But we're gonna really dive into this focus on tokenization and the best ways for tokenization to really bring bring the whole industry into the light. So wow, yeah, man, this so forgive me, like I said, my head cold is really fighting me, but I've been working on this for a few days and I wanted to go ahead and put it out there, and so that's what I'm planning to do. All right, but yeah, if you get a chance to jump in, throw something in the chat just to let me know that we have some folks here. I know how live streams work. A lot of times, it's a timing issue. There's never the right time for everybody. And so I thought I'd just do this because it saves me from doing a lot of editing. I can just put the information out there and people can jump on and check it out. Right. So this is why I just said, hey, I'm going to go for it. I'm just going to, just do it. Right. And so right now, I want to go ahead and I'm going to play this quick video just to give you an idea of some of the really incredible things that we got going on. All right, so let's go ahead and do that right now. I hope that the audio works. That's one thing that kind of messes me up sometimes, is audio.
Hello, everyone. Welcome to the Miami Apartments in Icon Brickell. We have an absolutely beautiful property here that we want you to check out. Now, this property has everything that you need, and we're going to go in and show you. So come on with me as we walk through this beautiful apartment here. And the first thing that we're walking into is the kitchen, which is laid out beautifully. You have all the necessary things that you would want in this property here. And I'm going to tell you guys that it's set up for you with all the luxury amenities. You can even see that it overlooks the balcony right here through this window. Now, if we take a step back, we're going to look into the living room here. And this has a perfect living room area if you're going to get together with friends and family. You have a television here that is nicely set up. And look at this view, which is absolutely iconic right here. No wonder they call it the icon brickle here. This is absolutely amazing. And we love the way that this property is set up. All right, now what we're going to do is we're going to take you down into the first bedroom. And I want to tell you, I like the way that this bedroom is set up as well. It is designed for comfort here. You're going to have a nice king size bed on in this bedroom. And we have this beautiful view here of the bay. Now, I can't take you guys outside to look at this right now because they're doing some renovations to make this even better for people who come to stay in this beautiful apartment. Now, if we move a little bit further over to this side, you see that you have a closet, nice closet space here for all of your clothes and everything. Beautiful closet space. It's actually built out so you have shelves and everything to hang whatever you need to in the closet. So that's absolutely amazing as well. Next, what we're going to be looking at is the first restroom that it has here. This is a beautifully laid out restroom as well. As you can see, we have the his and her sink and a shower in this restroom. And this will be the restroom that will be for common use and for the person in that first bedroom there. So we like the way that this is laid out also. Now we're going to take another stroll into the master bedroom, which has the in-room suite, and it's absolutely phenomenal as well. So this master suite, primary suite, whatever you would like to call this, is absolutely amazing here. As you see, we have the mirror behind the headboard here, and you also see that it is overlooking the beautiful bay and the city there. You can see both through this, which is amazing here. We love this view from this room. Can you imagine just relaxing and seeing this beautiful view in the master and the primary suite? So we'll take a walk into the in-room bathroom here, which I believe is amazing. It has a lot of space here as well. You're going to have a closet here, which is wonderful for you to store all of your things. It's fully built out with shelves and everything that you would need in there also. So here we have the in-room suite, which I absolutely love because this suite has the his and her sinks also, so it's perfect for couples. But then it also has the tub if you would like to go ahead and soak, but it also has a separate shower for those who want to get the shower in, which makes this amazing. It has all of the options that you're going to be looking for when you're going to come stay in Miami, in the best part of Miami, in the Brickell area. And if you're going to be in Brickell, why not be in Icon Brickell, where you're going to be able to have all the luxury amenities that you could ever wish for.
Amazing, amazing, amazing. That is something that is really, really amazing because we have an opportunity now, right, to see inside one of the properties. Most of the time, we may see some of the properties. Maybe we'll see pictures of the properties. But this was one of those times where we were actually inside, right? And my man Anthony Deloach knocked it out the park with that particular walkthrough. So one of the things that I want to kick this off with, I want to kick it off with some industry information, right? Because I want to give you a couple of things today, right? I want to take you through current events. I want to talk about blockchain. I want to talk about crypto. I want to talk about, what the industry is doing at the highest levels, right? We will get into the actual tokenization of real estate because that's key to whatever you are doing. And if you're watching this, then you must be interested in some level of tokenization of real estate because that is really central to the conversation. And that's where everything is going, right? And so you really got to focus on what that means. But since it's been such a hot topic with the Clarity Act and, a lot of people, I know that there's an XRP army out there. I'm not necessarily an XRP, army member, but I do believe that XRP is critical to the success of crypto and adoption as well. But at the same time, I think that Ripple and the Ripple ledger and the Ripple Foundation is really what is moving the industry forward. Right. When you get into what Brad, Garlinghouse and Brian Armstrong with Coinbase, those are real fighters for the real mainstream adoption of crypto. And so there's a balance between should it be part of the financial markets, or should it be something that runs kind of adjacent to the financial markets, because we know that blockchain was developed and crypto came on top of that development in order to keep them separate, right? You have TradFi, or the main traditional finance, that's actually posing as industry or the agency to help people manage their money, when really they are controlling your money. Whereas you have crypto comes along, and blockchain and Bitcoin was the first, obviously, to put the money back into the hands of the people and let you manage it yourself. So which one is should they work together, or should they just keep working separately? So one of the things that we know is it doesn't matter which one happens, because there's going to always be a way that people will figure out how to be successful with their property, with their assets, and they can either trade them together, or they're going to keep going down the road that they're going. So if we get regulation, if we get guardrails, if we get constitutional level acts and bills that control, right, that's what it really is. When you accept that the government has put guardrails around your crypto, then they control how that crypto is handled, right? And so that could be a problem. And this is where Brian Armstrong was pushing back on the Clarity Act. And there's so much information here, so many layers to this, right? And it'll take forever to get into it. So what I want to do is go ahead, and I'm just going to talk to one article, because there's too many, right? So I'm going to talk to one article that I really, really liked, that Jeffries, this one agency, very reputable in the industry, highlighted some things about the Clarity Act and where we're going with that under a tokenization kind of heading. So I really thought that they hit the nail on the head with this. So I just want to summarize it a bit. I don't want to talk to all of it, but just to give you some highlights here, he talks about, Jeffrey highlights Clarity Act as a tokenization catalyst. Look, that word tokenization continues to rise to the top, because over the years, a lot of people were trying to understand the evolution of blockchain. What's next? We got crypto, we got DeFi, we got Web3 coming through, we got AI, we got all of these different technologies that are emerging, and then meme coins jumped in there and really just kind of muddied the waters, and it really put people off. And so there was like, how do we get this back on track? How do we get this moving in the right direction? Whereas, what can we do at the NASDAQ, the New York Stock Exchange, at the BlackRock levels, where we can really help people by utilizing this blockchain and what it offers. And what happened along the way, tokenization became that catalyst, right, for the movement of crypto and blockchain in the traditional finance world, right? And that's what's moving the regulations forward, because they saw a way that they can utilize the technology without bringing in all of the extras that were not value added. So I think that's really key to understand, because right now we don't know the results. We don't know 5, 6 years from now, do we know that it's good that there is regulations around it and they start to control things? Or is it good that they just provide something like Dubai has their regulations for blockchain usage, and then the government actually, use it in the land management department, the Ripple network actually. You have the MICA Act, which is in the European Union, and so these are some of the actual regulations that are put out there for blockchain service, blockchain, developers or companies that utilize those networks. And they're just saying, here, do it this way, make sure it's legal, right? Gives the people protections. But in the US, it's more of a, let's see if we can go ahead and capture this market, this new technology, and use it in a way that we see fit. All right. So in the Jeffries highlights this Clarity Act, it talks about the financial services from Jeffries. This firm has identified the draft Digital Asset Market Clarity Act as a pivotal catalyst for blockchain tokenization, despite the legislation facing significant roadblocks in the U.S. Senate as of January 2026. In a report led by the analyst Andrew Moss, Jeffries emphasized that the act could provide a technology-neutral regulatory framework, moving away from regulation through enforcement and offering clear guidelines for asset clarification. So that's really what I was referring to is, give us some clarity, give us some oversight, but not enforcement. Don't try to, shove it down our throat. Don't try to say, oh, you did wrong and now we're going to penalize you for it. But hey, how do we work together and do this the right way? And I think that's what the Ripple CEO as well as Coinbase CEO, that's all they really were wanting to do. And there's a lot of other guys out there. You got Qcoin, you got Gemini, all of the leaders behind these programs are saying, look, we just want to work with you. You don't want you to enforce and try to, regulate how we do business, but just give us some guardrails so that we can protect our people and we can make sure that we're doing things that are within the boundaries. Right. So in the original House version of the act, they proposed this 3-bucket classification. So this is critical because if you've been watching the news today, you would know that, like I said, the Ripple CEO has been sitting in the advisory, committee, and along with others like Brian Armstrong as well in the CFTC, right? So to understand the dynamics here, a lot of people believe that these acts are falling under the SEC, right? But what we don't understand is the SEC runs more of the actual securities, actual treasury, type assets, where you got the stocks, the bonds, and those type of things. But the CFTC handles the commodities, right? So it's the commodities. So commodities. So we know that they were trying. That's why the SEC tried to sue Ripple in the first place. We went after Debtbox as well because they said you're offering securities to people, right? And so Ripple was like, no, we're not. And over time, Ripple won that case. And so that was something that was pretty awesome. But it did open the door to rethink how we look at crypto. So digital commodities is what cryptocurrency should be classified as, not securities, because it's not offering that same level of financial, advantage. So you can't put a crypto in the same category as, Microsoft stock because it does different things. So what they've decided, and with the help of a Brian Armstrong and Brad Garlinghouse, these guys said, hey, hold up. They're on the advisory board. They're looking at this with the rest of the people in the CFTC and the SEC and FINRA and all these places. And they're saying, no, these are commodities, just like what the CFTC governs over here. This is where Bitcoin, Ethereum, XRP, all of these should be, right? So if you want to regulate it, put it in this particular bucket. So digital commodities, the cryptos, would fall under CFTC jurisdiction. Investment contract assets from ICOs would initially be SEC regulated, but not treated as securities in secondary markets, right? And so the permitted payment stablecoins would be overseen by banking regulators, which is a problem, but I think they'll work that out. Excuse me. I think what they've come up with the latest information that we got, the between the banks and the DeFi market with the stablecoins and the staking, I think what they balanced out to say, hey, look, the bank said we can get it up to maybe 2.5, maybe 3% max on the APY. But that in crypto, when you're staking, you can get 4 or 5% APY, right? So still not like mind blowing, but it's still a big difference between what the banks are offering and what crypto is offering. And so that's been a stalemate for a couple of weeks. But that thing, I think that's coming to a close here pretty soon. And that's where Ripple and XRP being, well, Ripple really, the foundation itself, is going in and fighting a good fight in order to position crypto in a way that there is yield that is pushed up for the banks if they want to play ball. And then you still get the benefit of your yield through staking, outside the banking system or through the crypto. So those are some of the balances that they're working out. All right. So as a key feature was the maturity certification pathway, allowing assets to transition from SEC to CFTC oversight once their underlying blockchain became sufficiently decentralized. So that is really, really important because nobody wants their crypto or the crypto exchanges to become centralized. They are really not trying to do that. And so even though that Brian Armstrong and Brad Garlinghouse, even though these guys are really at the top, of respect level, in the industry, they too have worked with numerous traditional finance or asset managers in order to bring crypto into their particular companies, but they don't want a full-fledged crypto operation. They just want to offer that as an option. And as we know, I think I reported that Fidelity, was the first one to literally create a stable coin and offer it to their particular investors. So that's pretty big because a lot of them talk about it. BlackRock talks about it, and so many other agencies. But Fidelity, being one of the oldest asset managers out there, globally, they actually made it happen and offered it to their people. So that's pretty cool. Anyway, just to push through some of this, the bill stalled in the Senate. It's because the banking committee. So that's something that did happen. So Jeffries is the agency here. Their analysts argue that if the Clarity Act is implemented, the framework could reshape tokenization processes across various sectors. That's really key because what we're looking at and what I've talked about for years, literally, is that tokenization is the movement forward. That's how things move forward. That's how traditional finance gets on board. That's how the next level that just citizens that are investing in these particular financial markets, this is how we level up. This is how we get access to things that we didn't have access to before, right? It's a level playing field when it comes to having something like the Clarity Act that actually does the right thing. Now, initially, it didn't. Initially, it laid out some groundwork, but it did not give the crypto enthusiasts what it needed to move forward. That was critical. That was something that was kind of a problem, and that's why we're glad to have some of the gatekeepers of crypto out there saying, "Hold up, we need to clear this up before we move forward." All right, right. So they say anyway. Right now, the report. So in this, let me look at this right quick before we move on. So they need clear framework that can reshape tokenization processes across various sectors, accelerating activities by traditional financial platforms like New York Stock Exchange, NASDAQ, and SWIFT in using token-based settlement technologies. That right there is powerful because here's what it's telling you. If they can get the right wording and get that act passed, the average person that's investing in stocks or NASDAQ or ETFs or whatever, right, or moving funds through the SWIFT banking system, you're not going to know that there's some blockchain that has moved it faster. You're just going to know that, hey, I utilize my bank to move this money. I utilize this network over here to move my money because I wanted to send money from point A to point B, from US to Philippines or wherever. You send it. Normally it takes 2 or 3 days. Maybe it takes 3 or plus days, right? Well, guess what? With this system, now it takes a few minutes and you're like, oh my gosh, you're just happy that your funds got moved from point A to point B quicker. And that's the beauty of what they're telling you. Without tokenization, then you just see it moving and you track it, and it moves and you track, and okay, I got this code and I got to give this code to the person on the other end so they can receive the funds. Well, guess what? That person creates their account, their wallet, that money gets sent. Ripple network in the background tokenizes it through XRP, gets it to destination instantly, and that settlement happens because of tokenization in seconds. This is the beauty of the Clarity Act doing the right thing with the conversation between the banking system and the gatekeepers of the crypto or blockchain system, right? So as long as they work together, things will happen so much better. I'm talking, the DTCC, right, which is the largest regulatory body that settles quadrillions in USD for the New York Stock Exchange, NASDAQ, the biggest asset managers trading platforms out there. They have already announced tokenization of their particular securities, as well as all the treasury funds and everything. So this is happening anyway. So we might as well get on board, right? So tokenization really is the catalyst for the next evolution of finance. Now, this is how we do it. This is a great conversation. I love the fact that we at least are at this point, right? In the US, they're actually having a conversation of substance. It's not about, hey, let's just put something out there. Let's just go out and sue, Ripple. Let's sue some of these projects. Novatech got hit. Crypto program got hit. So many programs got beat down because of no regulation, right? And so even though the agency thought they were doing things right, but there were no guardrails up. So the SEC or the Better Business Bureau or chain analysis or any of these watchdogs out there could say you're not doing it right because there were no regulations to do it. So even though there's some issues that they got to work out, but at least they have actual crypto people in the conversation that understand this. They have actual crypto, CEOs that have their own exchanges that are part of the traditional financial markets. We know that Coinbase has their stock, that's public. We know that Gemini stock went public. Therefore, they're in the system. They understand both sides. And so these are the people that are helping to structure this particular bill in order for it to pass, to take advantage of both sides, right? One, you got guardrails up, you have some regulation there. And two, you don't have them beating you across the head with regulation. You have them working with you in order to provide a better product in the end for the consumer, for the cryptocurrency enthusiast, as well as your average person that invests in these agencies. And now they can widen that investment and they can get their settlement quicker when they want to go ahead and withdraw or move their funds around. So it's a beautiful thing all the way around, as long as it works like it's supposed to work, right? So I just wanted to drop that on you and make sure that you understand that this is huge, right? This is not like some little thing happening on the sidelines. This is something that will change the trajectory of crypto adoption, which does give us pause if it keeps going one way without having the guardrails up to protect the people that take an opportunity and then just get slammed because you didn't see it coming. So these are some of the things that, from Blockchain Speaks, this is something that, when I first created Blockchain Speaks as a podcast, I used to look at a lot of different things. I talked about El Salvador and their adoption of Bitcoin. And then you look at the UAE, and it was like the first one to create Vera, which was a virtual assets regulation. And then you had MiCA that comes along. And now we can talk about, the US, Japan has a regulation, Switzerland has regulations. It's a lot of people, a lot of countries out there that say, you know what, we're not going to sit here and fight this. We're going to actually put something together because people are going to find alternative ways um, to get involved in this wealth transfer, period. Like, why not? Your 9 to 5 ain't going to do it. If you get a chance, you definitely want to check out my man, Daryl Porter. He did an amazing, amazing presentation out in Miami for estate. And he talked about earned income versus passive income. And so when you get into those conversations, you start to get the light bulb goes off like, wow, dude, like I didn't know finance at that level. I didn't know that there's a rate of exchange for my time, right? My time, effort, equals what they'll pay me. It doesn't equal your real time and effort. It just means that's what they're going to pay you. So if they're paying you that and you're working for it and you're accepting it, is that your value, right? That's something that really highlights the system that we're in. And then you start to understand that the banking system created back in the day by JP Morgan and the central bank and the Federal Reserve, all of these are connected in order to make sure that you stay within this bubble. Yes. And then somebody, from the Labor Department decided to tell you what an hourly rate should be across the globe. Well, across the nation, basically. And when you sign that contract, you say, I'm okay with earning $3 an hour or $5 an hour, and so on and so forth, right? And then guess what happened? When after the fourth or fifth crash of the financial market in the US, 2008, 2009 comes along, and somebody said, we got to do something different because this is crushing, my retirement. And so people are losing funds left and right. And so at some point, a white paper was created. Somebody or some group of people sat down and said, we have to change this. And that's how they created the white paper for Bitcoin. And that blockchain, agenda was pretty much started around that time. And crypto was brought onto the mainstream at that point. And that's why we see a Bitcoin. That's why we see 2,000 to 3,000 new active coins. There's probably 20,000 inactive cryptocurrencies out there that have no backing, do nothing for you, me, or anybody in between, right? So I want to transition to the topic, tokenization, but I created a very detailed overview, right? I know that's kind of a weird, thing to put together, but I do have a new presentation that I want to roll out to the audience today. And, if I can get some feedback, that's great. A lot of times I don't get the feedback, but if you could provide some feedback, that's cool. Because what I want to do is I want to roll it out. I want to talk about it. And then I don't want it to be too long, but I don't want it to leave out, essential parts, because the tokenization of real estate assets is so powerful. And as I've studied along the way, this has been like the culmination of all the things that I talked about over time. And now this thing has come to fruition in a beautiful way, right? This is so huge that I was like, how in the world, right, did these guys put this together and do it right? And I'm gonna give you a quick example, because if you've been with me over the last, let's say 4 years or 5 years, right? I know some of you are saying, what? No, but if you have followed me for that time frame, I've been doing videos a long time, right? Been on YouTube a long time. And I started with a company called Saphir and Zanique, right? Zanique was the blockchain, Saphir was the marketing arm. So, but what was their main thing? Tokenization. They were about tokenization. So when I first started talking about Saphir and Zanique, we were talking about buying hubs, which were miners, basically, or nodes. And when you did that, then they evolved into tokenization of the climate credits, right? Tokenization of climate credits. Like, there are people out there that's doing it right now. There's tokenization of water vapor. Yeah, my good friend Dexter Moon, genius, right? He created a white paper about tokenizing water vapor. Fascinating stuff. I mean, literally making water out of air. It's just like mind blowing. there's tokenization, the Tupan token, the Avanok token, tokenizing airports, tokenizing aviation, every part of aviation. This was talked about back in 2020 and 2021 when I first got involved with Saphir and Zanique. So tokenization is not a new thing. Tokenization is essential to the evolution of blockchain, the evolution of crypto, the evolution of finance, right? Now that AI has come into the play, Web3 is coming into the play. Now you have companies that have studied this stuff, and you have people that are in the real estate market. You have DPN, right? DPN is alongside of DeFi, alongside of TradFi, alongside of the crypto space. But DPN is about the infrastructure. DPN is about the underlying physical assets, the physical structure that moves forward this whole blockchain space. A lot of people don't hear about DPN because it's something that's already incorporated into the blockchain and tokenization. So you got this kind of transition between blockchain to tokenization. How do we mix those together? And you have DPN that's kind of fitting in the middle. So when you look at this from a macro scale, you're like, how do we get to the adoption? How do we get to the wealth transfer? How do we get to the point that I can see what's in it for me? eEstates has created a platform of digital real estate. This is the new era of real estate. This is that next level, right? 2020, 2021, 2022, I saw agencies that were putting together. I was literally part of those agencies. I was advertising for them that we're talking about tokenization of climate change and climate, excuse me, climate credits, right? Tokenization of aviation and tokenization of everything. This was so powerful, but they couldn't get it right. But guess what? Here we are in 2025, 2026, and literally eEstates Group, they were incorporated. They came together basically and created a company in 2024. So that's what we're going to talk about. All right, man, I apologize for that. But this is a fascinating story. But hey, like I said, I put together some new slides. I want to see if these work. I want to see if this is something that, get some feedback on, and just let me know. So let's all right, we're gonna get through this though. All right, let's kick this off. Let's talk about the new era of real estate. We're going to talk about this particular platform, this particular program called eEstate. Now, 3 things I want you to know. 90% of investors are stuck in 2024. I would say maybe older. Let me show you how you can use the 2026 strategy. I want you to stop buying physical real estate. Not really. You can if you want, but start buying the code behind it. Today, I will show you how we're turning what was trapped equity into daily tokenized profits. So we're going to go over a little bit about the founders. We're going to talk about what's today's objectives. And I want you to hold me to those objectives. We're going to talk about the problem. We're going to talk about what is tokenization, why tokenization, according to, the eEstates kind of ecosystem, and why eEstates is the solution that we're going to talk about today. So the team, we have Brandon Stevenson, we got Mike Hamilton, we got Carol Peterson, and these are the ones they make up what we call eEstate, right? The eEstate group, eEstate has a platform of digital properties. Now, they're digital because they're online, but there are physical properties, and that's what the RWA really represents. And so we have the CEO, co-founder is Brandon Stevenson. We got the co-founder, Mike Hamilton, and we have the head of agents, which is Carol Peterson. So a little bit about me. I'm Coach Rashid Hill. So today we're going to show you how our platform has positioned itself as the solution to the limitations of the current model, right? So as far as for those that don't know, I'm an investor in various assets across the board. I'm excited about helping others understand the power of tokenization of real world assets through my podcast called Blockchain Speaks, which is what we're doing now. I studied blockchain, blockchain as a service, and the crypto industry. And I've done that since about 2016. Seen a lot, learned a lot, earned a lot. And now I think I found the right spot. So this is a picture from the actual event. We had a summit out in Miami back January 31st, February 1st time frame. Had a great time. It was a blast. I was doing a talk about from planning to performance. So that was pretty cool. So the objectives I want to talk about today, I know this might be small depending on what computer you have, but I'm going to highlight these things, and we're going to, like I said, I want you to kind of hold these throughout the presentation and make sure that I answer these questions. So one objective is, in light of, the current real estate investing model, we will show you why e-estates my e-estates and their advanced tokenization model is here to dominate in the new era of property ownership. Okay, so I want to show you. Objective one is to show you why the e-estates model tokenization is going to dominate in this new era. Okay, that's the first thing. The second objective is, we know that one of the most important factors in property investment is payout frequency. We will show how e-estates uses blockchain technology to deliver daily frictionless payments to their members. How cool is that? Objective number 3 is about compliance. So compliance is at the heart of sustainability. And in this new era, you want to make sure compliance is at the top of the list. So in tokenized property ownership, e-estates has the receipts, as we say, and has the documentation as well. So let's go ahead and talk about the first objective. We know that there's a wealth gap in real estate. Now, what's that wealth gap? When we say wealth gap, we're talking about the wealthy and the not wealthy. Why is it that there's a big wealth gap when it comes to real estate? I think most people will agree that over time, growing up, going through school, going through any networking opportunity, the bottom line is, if you want to be wealthy, property ownership, property investment, right? That's always been the conversation. Always. If you want to get wealthy, own real estate. Here's an example. When I look at a documentary about McDonald's. In that documentary, the guy, I guess he was working for Burger King. And at a point, he just said, you know what, there's got to be something better. So he quit. And he goes, and he's hungry somewhere in California. And he sees this little burger spot. And he's like, man, there's a lot of people over there. And I mean, there was a lot of people, right? And they were kicking out these burgers and shakes like faster than he ever seen. So he goes over. And when he gets his, he's like, how are you doing this so fast? And they showed him, and he was like, oh my gosh, that's a great idea. But you know what he did? He didn't go back and say, all right, let me go open up a burger spot. He created a franchise opportunity. And guess what he offered as part of the franchise? Mandatory part of the franchise. You lease the land from him. So he would buy the land, the location, and you would, boom, put your McDonald's on that land that he's leasing to you. So he wasn't leasing the franchise, he was leasing the land. And the franchise wasn't that expensive at that time. Pretty awesome, huh? So land ownership equals wealth in so many different countries, right? But in this country, there is a couple of things that hold us back: cost, time, bureaucracy. These are the 3 key things that will slow us down. And that's why many people have not been able to get into the wealth game, according to every statistic, that land ownership, land investment, property investment is the key, right? Cost. It's too high. You don't have the money to do it. Why? Because they lock you into a financial system where they pay you hourly what you're not worth so that you have enough money that you can invest. So that's one problem. Two, lack of access. You don't have time to even try to get into the rooms. So you don't have the time. You can't get access. Not going to even invest. Three, the process. If you do get in there after you've hustled and got money, got in there, and you're part of a REIT or something like that, then the bureaucracy of the paperwork, the documentation, the legalities, you just don't have it. How can you flip a house when you can't get any of this stuff done because you don't have the time, don't have the cost, don't have the access? It is what it is. The system is rigged, and you have to figure out a way to do it better. So tokenization helps to open that door. And so when we say tokenization, the first question is, what is tokenization? Right? Simple, in a simple definition. Tokenization in real estate, this is about taking the ownership interest of a property. Let's say there's a building, right? A building that's 100,000 square feet, maybe, $1 million building. And if you wanted to invest in that building, maybe each share is like $100,000 or something like that. You're like, I can't afford that. So you walk away, right? We just talked about cost being the prohibitive factor. But what tokenization does, it takes that $1 million building and it breaks it down into smaller shares. So instead of paying 100,000 or more because you got to be an accredited investor and so on and so forth, now you can pay $100 per share and get as many shares as you want. And I'm going to give you examples here in a few seconds about that. So you can have $100 per share. And so you take this ownership interest and take it out of the $1 million down to the $100. So you have the same access as those that can spend the $1 million or the $100, right? And so when you tokenize it, you create shares of ownership and you put that on the blockchain. And that's how we have access through tokenization to these $1 million properties. Okay, cool. Now here's some examples that I wanted to highlight that I came across recently. So in here we have the Mayfair Hotel, right? Anybody know the Mayfair Hotel? So in the UK, in London, in one of the most upscale areas of London, there's the Mayfair Hotel. Did you know that the Mayfair Hotel was tokenized? So there was a Gulf family, right? And basically there's money in a fund that the family basically says, hey, we're going to invest this somewhere. And so there was an opportunity. They took the opportunity in 2019 and they basically were able to purchase for $600 million the Mayfair Hotel through tokenization. There's one called the Brickmark. Brickmark in 2020, investors, they did a partial purchase tokenization in a high-end commercial building in Zurich, Switzerland. They did that for about 14 million. Another tokenized property, right? Never heard of it. Why? Because we're not in the rooms. We don't have access. Remember, the gap is based on access. The gap is based on cost. If we don't have it, then we're not even going to know about these. Here's my favorite one. Well, not really, but here's a good one. In Silicon Valley, San Jose, California, for the first time in history, in the blockchain history, I would say, there was it was a construction project to build luxury apartment, and it was tokenized for sale for $100 million. Here's the important part of that. They tokenized it for $100 million. This was back in 2021. Each token was being offered for $1. So it's like having a $1 share, right, in a company. If Microsoft came out and said, hey, look, we're offering you, our shares for $1, I think everybody would have jumped on that. So if somebody would have told you about this Tower 27 in Silicon Valley, which has the largest per square footage in the world, it's crazy. $1 per token, $1 per share in this $100 million construction project in the highest per square footage place on the earth. Would you not have put some money into that if you would have known about it? But unfortunately, we're not in the rooms. We don't have access to get involved with something that powerful. And they're going to cash out or exit, he said, in 5 years. So the exit's happening in 2026, right? So they started 2021. They got 3 years to build it, and then they're going to make their exit. And they say they're going to exit at a rate of about 18.6%. Now, in traditional finance, that's a pretty good deal, right? People put in $200,000-$300,000 makes sense. But for those put in, $100, $200, $1,000, 5 years, 18%, just not attractive. But hold on to that, because e-estates is gonna give you something a little better. The Palm Jumeirah. Palm Jumeirah has condos, villas, nice space. Has the Atlantis Hotel in Dubai, right? Did you know that the Dubai Land Management Department in 2025 has a tokenization strategy where they used about $50 million to run a pilot project for fractional stakes through tokenization? And guess who they use for their tokenization platform? Guess what? What crypto? They use XRP. They use the Ripple ledger, and they use other networks, but everything is done in XRP. How cool is that? So this is why XRP is really at the top of their game when it comes to regulation, when it comes to consultation. They're all over the world, right? And that's, I said, that's another story right there. But that's why people are really behind XRP and Ripple, is because they have established themselves to be the leaders when it comes to this crypto movement. Then we have the St. Regis in Aspen, Colorado, right? One of the first U.S. tokenized commercial properties. So this was in 2018. They tokenized about $18 million in security tokens. So we haven't talked about security tokens versus utility and so on and so forth, but we know that security tokens are reserved for a certain level or a certain group, which is called accredited investors, right? And so I wanted to go into a conversation a little bit about what the latest evaluation or examination or clarification, if you will, for becoming an accredited investor or having that title, because it's not about the $1 million or the 250,000 or so on and so forth anymore, right? In 2025, the SEC offered an option where you can test, right? You can take a test, take an exam, and get your certification saying that you are a sophisticated investor. Now, becoming a sophisticated investor is different from an accredited investor, because the term accredited investor revolved around how much money do you have, how much value, how much actual, value you have as far as your house and, your assets and, the money in the bank. And even if you're married, so on and so forth, 250, 300,000, as well as the $1 million, not talking about your primary resident, but your, assets that you have. So now they've changed the game and said, look, to become a sophisticated investor, which is equal to accredited investor certification, then you can go ahead and take this test. And if you pass it, you can go ahead and register with your local, state as a some kind of regulated investment advisor or something like this. And of course, there's fees involved in that. And then you have to renew every year and so on and so forth. But that will put you in that category. And now you have pretty much unlimited access to investments across the board, right? And so you can take a look. I put the link there, so the reference is there, so you can check that out as well. So with that being said, when I talk about tokenization, and as you can see, I'm very, very passionate about tokenization being that catalyst, right, to move the industry forward, and for people like myself to be able to play in this particular sandbox. This is critical. This is important. This is where the $1 million, $1 trillion happen, is understanding what is the foundation, what are the guardrails, What surfboard do I need to get on to ride the wave, right? This is critical, critical. So why does tokenization, why does it change everything? Like everything, right? Tokenization refers to the process of converting real world assets into digital tokens on the blockchain, as we said. Then you have another reason. It enhances liquidity by allowing fractional ownership of high value assets. Liquidity, liquidity, liquidity. You have nothing if you're not able to settle that particular profit. You got to be able to access your money when you earn it, when you need it. It's not illiquid. It's not locked up into real estate. Like I said at the beginning, we're taking you from a 2024 mindset to a 2026 strategy. The technology aims to streamline transactions and reduce costs associated with asset transfers. So you make more money, you have access to your money, and you do it at lower fees. Tokenization can improve transparency and security in the asset management. You have nothing if you don't have a secure transaction, right? So the security and compliance is wrapped around that. It's gaining traction among startups and investors in Silicon Valley and across the globe. Silicon Valley, like I said, it is well known that Silicon Valley has the highest rate and the most expensive real estate, literally, around the globe. And so there are so many organizations that are coming through and finding out about blockchain and tokenization and how they can get involved in that. And investors are taking advantage of that as well. And so we're in the right place at the right time for sure. And thus, I introduce you to e-estate. E-estate is leading the charge. They're doing it the right way, right? I've been involved. Like I said, Saphir and Zanique was an amazing company. They're still around, by the way. They just changed the name and they kept it moving. So they're not gone. But they established themselves as, we're laying the foundation. You can look up, their blockchain is still running, right? The Explorer is still running. They're still producing, but they do have, they weren't able to bring tokenization in their partnerships online in an efficient way. And thus, that was something that I had some issues with. But when e-estates comes online, and you see that e-estates is revolutionizing the real estate market, combining cutting edge technology with accessible investment opportunities for everybody. Everybody has access. Everybody has opportunity. Everybody can play in this sandbox because it is available to you. This is critical. This is one of the most important parts of the puzzle. E-estates redesigns property ownership at the infrastructure level. You can actually categorize e-estate as a DPN authority when it comes to successful platform creation, successful execution of a tokenization strategy, removing legacy constraints while preserving the underlying value of real estate assets. Real world assets behind the EST token. This is how it's done. If you want to know how it's done, pay attention. Real properties, insured, tokenized. This is e-estate. Audited, each property, company, LEI verified. You don't see that very often, do you? That's an international identification that, hey, you know, a lot of companies, they hide behind a local verification. We know companies that have virtual offices in, you know, Delaware or in Wyoming or in Colorado. They're not doing anything. They obviously have some in Dubai because it's, you know, very easy to create that virtual office. So they can't be LEI verified because they're not established anywhere. But that's different. E-estate says, hey, we're open book. Transparency is key. And they have the community focused support, right? This is the agent network that supports the growth. Compliance. There's nothing without compliance. That was one of my objectives, right? I made sure that I want to talk about compliance. So you got the Financial Action Task Force, you got AML, you got LEI. These are critical pieces of verification and compliance standards that are critical to establish a legitimate foundation in this industry. Now, of course, when we talk about e-estates, we talk about what e-estates is doing. I'm gonna get into some really good features here in a minute, then you kind of want to know, well, what else is out there? Because you say e-estates is doing these great things, but compared to what? Compared to who? Now we know that Roots is a more traditional side, but they've taken some advancement, got a nice app, and they do offer benefits in a fractional setting. So definitely there. The most that Roots paid out, and it's weird because literally I was going through my pictures recently, and I had taken a screenshot about a year ago from Roots. I didn't even know that I even had this. And I said, oh my gosh, they were offering about 16% per annum, right? They pay out every quarter, but there's no guarantee, but that's the max of up to 16%. Well, the latest I saw with Roots, they pay about 14% per annum. And that's cool, right? That's a good number, right? If you're in a traditional side, like that's way more than the average. And so your money is locked up, for about 90 days before you can access, your funds. So illiquid is still the problem. Well, I'm gonna give you a competitive analysis on an estimated annual yield for comparative companies to e-estates. Okay, comparative. So we have Real-T, which is tokenized real estate, which is very comparable to e-estates because e-estates is tokenized. Yield Street is direct funds or funds direct. So you can work with them directly and you will see kind of the differences between e-estates, Yield Street, and Real-T. Okay. So you got the residential or single family, got the multifamily, you got commercial, you got real estate, debt credit, and you have industrial logistics. And so the industrial, I kind of went into kind of our high end. That was kind of the comparison I used for e-estates compared to these others. So kind of apple to apples, Real-T is closer aligned, obviously, because it's tokenized with e-estates. Okay. And so with Real-T, just to say real quick, their minimum their minimum is about $50, right? To purchase a share, a fractional share in their token. And they do have a secondary market where they can exchange a token on exchange, and you can withdraw your funds in a short period of time, which is cool. Okay. All right. So that's great. E-estates, $10 is the minimum. So just kind of give you a comparison there. Yield Street is about $1,000 is the minimum. All right. So with Real-T, in the residential side, 9 to 15% per year. Okay. They pay out, they say you basically accrue daily, they pay out weekly. That's kind of what that shows you. Accrue daily, pay out weekly, right? 9 to 15% per year. So monthly, that would be about 1% a month, right? 1 to 1.3% a month. Okay. With e-estates, same category. Instead of 9 to 15% a year, e-estates minimum is 6 to 9% a month for that category. About 72% a year paying. This is the profit that you're looking at, right? 6 to 9% a month. Okay, so give you apples to apples, right? So about 1 to 1.3% per month for that under the Real-T tokenized property. And with e-estates, it's 6 to 9% a month with that same category. Now, when we look at this multifamily, so a little bigger, right? High demand, 10 to 14% a year. So we're still looking at about 1 to 1.5. Let's give them 1.5% per month, right? They pay out weekly, but it's per month. Well, with e-estates, it's 10 to 15% per month, not per year, per month. So multifamily, 10 to 14% a year with Real-T. We do it, e-estates, 10 to 15% a month, right? Does that make sense? I mean, that really is a clear depiction of why e-estates is leading in this particular industry. And 10 to 15% a month based on the type of properties and based on the return, it's not even close to being extreme. I mean, not even close, like very sustainable, right? So you're looking at about 120% a year, right? So let's look at commercial. Commercial, 12 to 18% a year. It's phenomenal when it comes to traditional finance, traditional real estate. 12 to 18% with realty, same category. We're looking at 9 to 15% per month, not per year, per month with estate, same group. When we get into the industrial, the larger exclusive properties, they're talking about 11 to 8 to 11% a year. We're looking at about 15 to 20% a month. So it clearly shows apples to apples. Realty is tokenized, estate's tokenized. These are the different property types. It's more of a traditional categories, right? Estates has some different categories. I'll talk about the buyer levels as I go, but that's what you're looking at. Just to give you that comparison so you'll know apples to apples what we offer. Okay, cool. Right? So who's talking about estates? We're talking MEXC, right? This was recently published. Estate Group tokenizes $100 million worth of real estate, advancing tokenization trends. Then you got investing.com. Estate Group leads the next wave of real estate tokenization. You got CoinMarketCap, Estate's global launch, tokenization of real estate with EST on the blockchain. You're featured in Finbowl, 100 million in tokenized real estate assets everywhere. There's so many more places. Business Insider did a recap about us when we did our Miami summit. So a lot of places that you can find information published about what eStates is doing. Now, let's get into some key key features. I want to break down some key features to really nail home what eStates offers. Okay, just really direct to what eStates is doing. Projected growth, tokenized real world assets. So real estate market is projected to grow to at least $16 trillion by 2030. This is reported by the Boston Consulting Group, and that's 16 trillion. And I've seen as high as 30 trillion, but this is where we got the reference. And so I'm gonna stick with that. Other asset classes being tokenized include financial instruments, capital raising, commodities, collectibles, and art, right? So in addition to real estate, you have all these other asset classes. Recently, the SEC approved DTCC to tokenize security, ETF stocks, etc. So tokenization is at the highest levels when it comes to finance. What are some real world assets and tokenization? Let's give you some key factors here. Digital assets have evolved into a core focus for global financial institutions. RWAs are tangible assets brought on the chain through tokenization, as we talked about. Analysts estimate the tokenized asset market could reach trillions of dollars in the next decade. The benefits of that is transparency, liquidity, and global access, right? Why real estate is central to tokenization. This is so great because it really focuses in on what we're talking about here. Real estate is a stable asset class with long-term value and predictable income, right? So that right there is key. Real estate is a stable asset. When we talk about how to build wealth and people that have advised others on that, accredited or not accredited, right? People that just tell you, everybody knows. You don't have to be a genius. You don't have to be studied. You don't have to be licensed to say, yeah, I mean, you can grow your wealth in real estate. Here's the reason why. Stable asset class, and the value will normally appreciate year over year over year. Makes sense, right? Tokenization enables fractional ownership, automated income distribution, and global participation. This is key to what eStates offers. It offers fractional ownership. It offers automated income distribution. Yes, automated payments, instant payments, and global participation, right? They have properties around the globe. eStates bridges blockchain technology with tangible property for digital innovation and real economic value, right? It's very key. All right. So even though I've talked about it extensively, I did create a slide just to highlight, if you wanted to take a look at this, the difference between traditional real estate and tokenized real estate, because a lot of people don't understand what is tokenization and why it's so important, right? When you compare tokenized to traditional, then you get a better picture of why eStates is the leader and why so many people agents and buyers are coming to this platform. Traditional real estate requires full property purchase, right? You need large amounts of money to purchase real estate in a traditional side. Well, guess what? With tokenized, fractional ownership starts with small amount. So now you can take 10% of what you would have to purchase traditional real estate with, and you can purchase tokenized real estate, right? And still get the same value. Limited liquidity, long exit timelines. What did I tell you earlier? The T27 project, Silicon Valley, 2021, their expected exit is 2026, right? End of 2026. You're talking about a 5-year illiquid market. So your funds, your investment is locked up for 5 years before you see about an 18% return on your investment. Digital liquidity through tokenized asset structure. You get automated payments, automated contracts. Smart contracts will kick out every single day. If you say, I want to withdraw my funds, you push a couple of buttons, and within minutes, your profits are in your wallet. That's powerful. That doesn't happen with traditional real estate. Manual processes, fragmented documentation, geographic and legal barrier. If you're a real estate agent, you get licensed in one country, one state, right? You get licensed in one place. You can only operate in one place. Guess what? There are no geographic boundaries with tokenized real estate. As a digital real estate agent, I have global access without any local barriers or local administration or local license, requirements, because I have an international certification through the tokenized or the digital real estate membership. And ongoing management complexities, right? Purchase your traditional side, and you're responsible for everything. Passive participation without property management is in the tokenized real estate arena. Beautiful thing. So e-estate buyer levels. So we talked about e-estates. We talked about as a person that wants to purchase, fractional ownership in a property, then these are some of the areas. And I'm not going to go deep because I could do this in an expanded way in a different video. So the e-estate buyer levels, we got the starter buyer, you got the skilled buyer, you got professional buyer, elite buyer, and exclusive buyer. So these are some categories that they put together. It's very strategic how e-estates has given the opportunity for everybody to get involved, and you can ascend that ladder, right, in a strategic way. You can't just come in and dump, $400,000 and say, hey, boom, I'm just gonna buy out, this top level. No. There's a strategy to this, and that's why you have these categories, right? So your starter buyer, somebody that wants to say, hey, look, I got $10, let me try it out. It's a proof of concept. You can get a share in the Miami property. It's a condo, beautiful, luxurious, icon Brickell area, right? But you can get a proof of concept. This is how it works. This is what it does. Great, right? As a skilled buyer, you come in and purchase between a range of 10,000 and up to 25,000, right? Different properties, commercial, land plots are starting to add, so you can purchase in that area. But you got to start at one place, and then you basically graduate to the next. Then you can unlock your professional buyer status after you have purchased about $25,000 worth of properties. When you do that, then you unlock the professional buyer. The professional buyer, you include land plots, and you start getting into some higher end type areas, right? More sophisticated areas. 25 to 50,000 is the dollar amount for the purchase. After you get to over 50,000, then you're able to unlock the elite buyer status. You get into some of the commercial properties, some construction projects, some development projects on a kind of a high-end scale. And when you have surpassed the $150,000 investment side, then you get into the exclusive buyer levels. And that will take you from anything, like, so we got the $255,000 development projects in Dubai. And so you're able to go ahead and access that. Now, What's interesting about that is, let me see. Yeah, I think I talk a little bit about it on this next slide. So you have the buyer levels. And this is explained. Like I said, we have a nice pitch deck that has all of these details really, really explained. That's why I say I won't go into it deep here, because then we have access to take that offline, and I can really break down each buyer level and really give you a strategy to get you to whatever amount you want per month or per year, right? And so you have the buyer levels, you got the starter level, you have the skill buyer, you got the professional buyer, the elite, and the exclusive. And so we can give you, like, here's examples of the actual properties that you can actually purchase stakes in. Now, I want to give you an example. This is next level, right? What ESAs has done, they have created this key property facts portfolio. So you can actually, just like you would if you were investing in traditional real estate, we still have the same thing. Why? Because it's a traditional it's a physical real estate, it's a physical property, right? So we get the information and we give you the same thing you would get if you were shopping on the traditional side. We can provide that information as well, because we have a real actual property. And so these are some key facts that you can look at your leisure. I don't want to go too deep into that, but short-term rental, it's a 3,000 square foot property. It's beautiful. It has so many features that you would love. And then this one is about $1,000 per share, right? And you can see that the potential earnings on that is about $1,250. And so, if you need a little more information, you can actually go into our dashboard, and you can go to the knowledge base, and it gives you a complete package on the properties. It's pretty awesome. So you can see all this information as well. So I just want to give you a little highlight of that. We do have that available to you. Now, the income structure for buyers. Now, this is so powerful because you have an active phase and you have a passive phase, right? So a lot of people are kind of like, what's an active and the passive? Because I'm just looking for passive income. Well, it's all passive basically, but we just have to break it down because there's two sustainable parts of this particular program, right? The first sustainable side is the buyer side, where you actually get to purchase fractional ownership in a property, and you have the other side where you become an agent and you have additional bonuses as well. So in this particular side, the active phase is a daily income distribution for 18 months. Some people say, well, how can you pay up to 1% and it be sustainable with property? Or you're depending on people to rent it out and these type of things. No problem. But they're paying you up to 1% depending on the property, right? And that's every single day, business day, for an 18-month period. You're going to 2x to 3x your money in those 18 months, just so you know. Then it goes into a passive phase, just like regular, industry real estate investment. Lifetime ownership with a fixed annual yield of 10% distributed every 6 months. It just doesn't get any better than that. Pretty awesome. This is why EState is an industry leader, right? Trendsetter, trend runner, front runner, all those things. So that's just an example of the buyer levels. At the starter level, you got the daily return on equity, 0.4 to 0.8%. You got a monthly return on equity, 9.4 to 18.6%. And then you have the total return over an 18-month period of 170 to 335%. And that's just on the buyer level one, right? In that particular buyer level one. It's fascinating. But these are the type of things that, we can do. Now, the note here says buyer will get a purchase contract. You can have the option of auto capitalization or compounding your profits every 24 hours. And so you can do that all the way through the 18 months, right? And you'll earn substantially more through capitalization or compounding. Obviously, most people want to withdraw their money, so you don't, do that. But you can do that on some properties if you so desire. At the starting level, a buyer can purchase any number of properties in level one, which is $10 to $10,270. So what that's saying is if you want to buy 3 of the commercial properties in LA, or 3 of the properties in, I mean, the villa in LA, or 3 properties, the commercial properties in Phoenix, Arizona, right, for 10,270, you can buy 3. You can, that's 30,000, dollars and some change. You can purchase multiple ones, but you can only purchase in that buyer level 1. And after you reach 25,000, then you can go into buyer level 2, and so on and so on and so on. But like I said, there's a strategy behind that as well. So one of the strategies that I will offer up is to set up for long-term success, right? We're going to start you out diversified in the entry portfolio. Then you go up to the buyer level upgrade, and that will advance you after you maximize that, advance you through the skill buyer. And then that advances you or unlocks the professional buyer level. And then you get access after you maximize that through to the higher tier assets, through the experience and the exclusive buyer levels. So it just kind of takes you through these levels. Now we have people that say, "Hey, look, I got $400,000 that I want to invest," and you can look at that 400,000, and so you have to have some type of strategy in order for them to understand, how do I put this in the right place so that I can maximize my long-term gains. And that's what we're doing, is we're offering an opportunity for people to see it from a buyer level 1. If you maximize this part, then you're going to earn X amount here, and then you're going to unlock these others. And we've had people that purchased enough to qualify for all 5 actual levels because they had enough to do that. And they purchased enough from the 25 to the 50, then the 150, and then they purchased $300,000 worth of the exclusive buyer level property, right? And so they're going to be bringing in, anywhere from 48 to 50 something thousand a month. So it is possible to do it. You just have to have the right strategy to do that. Okay. So eState has an e-wallet. This is an internal currency transactions. So everything flows through the e-wallet, which is very convenient, actually. Built-in cryptocurrency wallets for deposits, purchases, income, and withdrawals. They are instant internal transfers and withdrawals. So that's amazing. Supports over 32 payment methods, including PayPal USD. That's something that I really like because it makes it very easy for the newcomer into crypto to purchase crypto and to go ahead and connect that with your eState wallet. And the minimum withdrawal amount, this is where blockchain is fascinating. It's only $1 if that's what you want to do. So buyers, what's your next steps? This is what you do as a buyer. Okay. All right. Give me 1 second. All right, let's do this. All right, so hopefully that you got that information, read the fine print, everything like that. You can use Cash App, you can use PayPal, USD, and that makes it easy to go ahead and get into the game. All right, so here's the vision for 2034. As you can tell, there's a link right there. You can download the PDF and you can read all of that great information. 2024, they established the particular platform. In 2025, they added properties and got market validation. A lot of people came on board. We helped to build this thing and grow this thing as big and wide. I think we got about 2,000 or so agents out there now, licensed agents actually. In 2026, we're going to add more properties. Got the expansion going on right now. Add the Desert Villa. That was a new property that was added. The Bali and the apartment, I think in Oregon, that one in Seattle, those two were sold out. And so they added, another property. We have 2027. We're talking about EST market integration. What does that mean? That the token, they're looking to put that token on the exchange. 2030 and beyond, we're looking at long-term scale objectives, over $1 billion in tokenized real estate in the portfolio. Pretty awesome. Some of the ongoing events that we got stuff in Latin America. We got stuff. We got the Miami Summit that just completed back in January. We got an East Texas event going on with one of my leaders, Mama Scott, out there. And we have top leader, strategic partner with the estates, Daryl Porter. That's right there leading the charge in Texas. He'll be in the house there to help them level up. And I totally appreciate that collaboration and this teamwork and leadership. And we have a 10-city tour that we're going to take e-estates throughout the U.S. This is 10 cities that we initially have, but of course, we're going to look at that and probably expand that out over the next year or so to additional cities as well. So we got our leader and strategic partner, Anthony DeLoach, leading the charge. We got Daryl Porter, another strategic partner, and myself are involved in making that happen. So really exciting times for everybody. Now, I just want to highlight this. I'm not going to go into detail, but I want to let you know there is a part 2 to the benefits of being a part of the e-estates group. You can become a professional digital real estate agent. Yes, you can. As an agent, right, you're operating at the intersection of real estate, investment capital, and digital infrastructure. This goes far beyond the traditional agency modes. So once you become an agent, here are some of the things that you can benefit from. You have the right to represent tokenized real estate globally. You have access to e-estate properties and investor tools. You have a personal agent panel for tracking production and growth. You have a structural career path within the global real estate ecosystem, and you unlock additional bonuses, commissions, and benefits along the way. Now, this is real quick. Like I said, separate presentation if you want to talk about being an agent, but there is compensation, obviously, in addition to earning profits on a daily basis. You have the ability to build a team. And if you do decide to share this information, you start building your team. The people that you directly refer, you're going to make 6% commission on that, anywhere from 2 to 1% on the other levels, down 8 levels. And now we have the deal commission. Then you have what we call profit commission, which is in addition to that. And so whatever profits are made on the properties of your level 1 through level 5, then you're going to earn commissions on that as well. Now, you unlock those because of your agent revenue share, right? That agent revenue share is built on your team turnover or volume. And so we have a table that shows you, based on your volume, what agent level that you will get your bonus, you will get revenue share, and you just continue to level up and earn. This is a phenomenal platform, phenomenal program that agents and buyers can just really take advantage of and become part of the solution, become part of the wealth transfer that's happening in this blockchain world. I want to thank you. I want to ask you to join Either States to get a global access to tokenized real estate. This is your opportunity. This is your chance. This is your moment. You can click that QR code and you can dive right in. But if you want to be an agent, just follow this particular process. Register, do your KYC, activate your membership as an agent. Agent is like $90 a year for that membership. You will get a certificate as well. And we're creating some knowledge-based questions to go along with that. So get in before we create that particular exam. Asset selection. So you want to purchase a property, purchase your tokens, and set up your agent dashboard, right? It'll ask you a few questions. You fill in those blanks and then click. You have your actual agent website, and you can offer that to your folks through your referral link. This has been an exciting time for us in the crypto space, blockchain enthusiasts, people that want better and will go after the information to get better. So this is what I like to offer you. This is my time with you. I'm excited about Blockchain Speaks, kicking that back off. We should have a weekly live stream talking about everything blockchain, the Clarity Act, the Genius Act. There's so many depths to that particular regulation. But I'm going to tell you, if you really want to take advantage of this evolution, right, from blockchain to tokenization, definitely want to look into e-estates as the way to go. All right. This is real world assets. This is real estate. This is real properties. This is real profits and real collaboration with top leaders in the industry. And I welcome you to be part of that as well. All right. Until next time, peace. And I'll see you on the other side.